Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a a commodity quick look at the price of gold. Gold prices are surging up near $27, $28 on the day. So let's take a technical look at what's happening and where we may be going, what risk-defining levels there are, and what targets are we looking toward in this video. All right, taking a look at the price back here. That was last week. The price low came down, tested the 100-day moving average and the price of gold, and also the 200-day moving average for that matter. Price moved below the 200, but found support against the 100-day moving average. And been up since then. Maybe a down day yesterday, but a surge to the upside in trading here today. The price is currently up $27.29 or 1.38%. And we're above the $2,000 level. That's going to be a natural support level going forward. As long as the price remains above the $2,000 level today, we can expect further momentum to the upside. Now, it's not all smooth sailing to the upside. Why? Because we do have these high prices at the end of October, which found resistance at $2,009.42. So with the high price today at $2,007.54, we got to get above that level. And right now, sellers are putting a little bit of a stall against that level. Why? Because risk can be defined and limited. If the price were to go above that level, I would expect further upside momentum. But as long as the price stays below it, sellers would look for a rotation potentially to the downside that might take the price down to the $2,000 level and see what happens there. So that's sort of the trade-off. The daily chart is we do have resistance up ahead. As mentioned, if we do break above that level, we should see further momentum. And as you can see, going back in time, there's really not a lot. We had lots of ups and downs through here above the $2,009 level. If we look at this high right here and this highs right here, they come in around $2,047 level, $47. So there's lots of room to roam to if we get above the 2009 level. And so be aware of that. Above that level, then we have the high price going back to 2002 at near $2,070, and above that, the high price for this year at $2,081.82 would be targeted for gold. But first things first, we need to get above the $2,009.42 level to increase the bullish bias here in the price of gold. Now, let's take a look at the hourly chart and see if that's given us any clues. And if we look at the hourly chart, what we saw in trading yesterday actually was the price did move lower, and we did break below the 100-hour moving average. And this trend line here, this trend line connects a different low to the low here, and is actually a high of this parallel channel line here. And but the momentum to the downside would target the 200-hour moving average. It didn't quite get there. It came right in between those two moving averages, and when the price moved back above the 100-hour moving average, we saw buyers pushing the price to the upside, tested the high price from yesterday's trade right through here, and corrected, and then moved to the upside of the last few hours of trading. So we're seeing increased momentum in the last few hours of trading in the price of gold, moving up toward the high price that we saw on October 27th right here, which comes in at that $2,009.42. If we move above that level, this topside trend line cuts across around the $2012 level. So even though it opens the door for the upside above the old high, we do have this trend line to contend with around the 2012 level. So be aware of that from a technical perspective. Get above that level and opens the door for further upside momentum. On the downside, we're going to be watching the $2,000 level again as support. That's just a natural level, a nice round number, and traders tend to pay attention to that. So we will watch that, and you can see how the price moved up toward that $2,000 level, found little sellers here, and then found the momentum to take and break above that level. So I am confident of that level being a risk-defining level for traders on the downside. As long as the price remains above it, it's more bullish. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.